Hey, good day, everyone. My name is Bert Salazar. Welcome to the Bert Salazar Show. This is episode 191. And today we're going to be talking about the collection statute expiration date, which is very, very critical when you owe money to the IRS. So normally we get clients that give us a call, they schedule a conference call with us, and then they engage us. And most of the clients that we deal with, they owe money to the IRS for several years. It could be 3, 4, 5 years that you have filed taxes and owed money to the IRS. But financially, you haven't been able to pay. Always remember that there are going to be fees and penalties to, either not filing a tax return or not paying a tax that is owed. Usually, the cost for not filing is higher than the cost that you incurred for not paying. So I always recommend to my clients that whether you have the ability to pay the IRS or not, because you can always do other things in order to bring yourself current, you need to file your tax returns. But sadly enough, once people start owing money to the IRS, they don't want to file their taxes, and now they're compounding the problem from a business standpoint. So the collection statute expiration date, also known as CSET, is extremely important if you owe money to the IRS. So if you get a nasty letter from the IRS and it says you owe us for 2015, 2016, and 2017, 25,000, 30,000, 15,000, and the total amount is this amount, and on top of that you have fees and penalties, it is important that if you're going to seek the assistance of legal representation, that you do so as soon as possible. Don't put those letters away, because the clock is ticking and it's costing you more and more money every single month that you go without doing something about it. So obviously, traditionally, the statute of limitations for the IRS for federal tax debt is normally 10 years. If it's for small business, it's going to be shorter than that. But for traditional federal tax debt, is 10 years. And is 10 years not from the day that you file, but from the date that the tax is assessed. And so you got 3 years from the date that you file, and then 2 years from the date of assessment, whichever is longer. So understanding those rules of engagement are going to be very critical for you if you want to try to negotiate with the IRS. Normally, if you're dealing with a firm like ours, Gables Tax Planning Group, and we're a tax planning and tax resolution firm, we know exactly and we figure out what is your CSET on each year of taxes owed, because they all change and they vary from one year to the next. So that's important to understand from that perspective. Now, what if you owe money at the state level? Well, states have their own rules of engagement, and they have their own expiration date. So their collection statute expiration date may vary from state to state. So let's say that you owed state income taxes in New York from 5 years ago, and then you moved to Florida 4 years ago or 3 years ago, and now you owe money in Florida. You have to understand the rules of engagement for New York and Florida to determine how long is your statute of limitations. Depending on how far back you go, that statute of limitation can become a little bit closer to expiration, and the IRS is going to become very, very aggressive in attempting to collect their money. Now, once the statute of limitation is passed, the IRS loses its ability to do any type of collection on you. So that's something that you want to pay a lot of attention to as you prepare to move forward from that perspective. Now, when it comes to business tax debt or payroll tax debt, the statute of limitation changes, and the IRS is very critical on payroll taxes. If you owe payroll taxes, you have to make that your priority, because the IRS is going to come at you, and they're going to be gun blasting all the way through. They're going to do garnishments, they're going to do levies, they're going to put liens on your properties and so forth. They can do anything they want. They're the Internal Revenue Service of the United States. And remember, Al Capone didn't go to prison for killing so many people. He went to prison for evading taxes and tax fraud. So be very careful when it comes to that as well. Now, one of the challenges is that, and I have had, I think it was in 2023, I got a couple of clients and they said, Bert, I read some of the stuff that you put out on your ebook regarding tax solution planning. And I've been on this, I've been getting letters from the IRS, and now I'm on my 8th year. So I should be very close to the end of the statute of limitations. And I have attempted to do installment agreements in the past, but all of a sudden I engage the IRS in an installment agreement and I'm not able to pay and so forth. So, but my 10 year is coming up. Well, the answer is not necessarily, because there are a lot of things that can extend that 10 year window. So, for instance, if you file your taxes and then the assessment is made, and now you got a 10 year window. Let me give you an example. Let's say your 10 year window goes from 2015 obviously to 2025. That would be the 10 year window. But if you attempted to get an installment agreement with the IRS at some point in time in that 10 year period, that actually stops the clock. So the clock is not moving while you're negotiating with the IRS on that installment agreement. And after the installment agreement is put in place, there's an additional period or buffer that the IRS places on it. And depending on what it is, that buffer changes. And then all of a sudden, you stop paying. And if you stop paying, you're going to have to negotiate another installment agreement, and you're going to show proof to the IRS why you had to stop making payments to them. What if you do, instead of an installment agreement, what if you do an offer and compromise? Well, if you do an offer and compromise, again, the rules of engagement are totally different. So while you are preparing your offer and compromise and you're sending that to the IRS, it is actually going to stop that clock. When it comes to offer and compromises, the IRS has up to 2 years to either accept or deny your offer. An offer and compromise, and I'm not going to go into details here because I have another video regarding that matter, but an offer and compromise is when you're willing to negotiate with the IRS and they're willing to negotiate with you for an amount lower than what you actually owe the IRS. So they're going to be very keen. They're going to be requiring a lot of information from you, financial statements and so forth. And you got to know how to put those together from a business and accounting standpoint and see where you're at in that collection process in order to avoid any type of booby traps along those lines. So those are things that are very important when it comes to the CSET period and how to understand that. Finally, if you have to file bankruptcy, it immediately, obviously, the minute that you file bankruptcy, the IRS can no longer pursue collection on you. So they cannot garnish your wages. They cannot place, they cannot levy your properties while you're in bankruptcy. But by the same token, that statute of limitation stops. It's not going to go anywhere. So if you file bankruptcy in year number 5 of that 10-year period, is going to stay in year number 5 until you settle your bankruptcy, you get discharged from the bankruptcy, and then on top of that, the IRS is going to add an additional buffer. Now, when it comes to bankruptcy, there are some federal taxes that could be discharged, but it depends on when that tax was assessed and how much time it took for you to file for bankruptcy. Some may be discharged, others may not. Obviously, you need to talk to a tax resolution specialist in order to help you with that. So I thought it would be a good idea to give you a little bit of a feedback as to some of the things that are so critically important to, when you're trying to negotiate with the IRS or you want to get rid of that debt that you owe with the IRS because it can create all kinds of havoc for you. I have a client that walked in about a year ago because he owed the IRS money, and obviously he was a business owner as well, and the business owed money. Well, it's reported to the credit bureaus, and all of a sudden the client business, although was doing okay, was not eligible to obtain any loans. because of that bad credit rating in the credit report. So those are things that are very critical. Don't sit on them. Make sure that you act upon them right away. And by the way, if you have any questions here, feel free to schedule a 20 to a 30-minute call with us or a video conference. You can reach out to us at 305-304-4770. You can also send us an email at Bert, B-E-R-T, at gablestaxgroup.com, and we'll try to help you in any way, shape, or form. By the same token, I always leave my clients with this thought that's very important, is that our goal at Gables Tax Planning Group is to kind of help you all, change the way that you see things, because when you change the way that you see things, the things that you see change. So once again, thank you so much for giving me a few minutes of your time, and I'll talk to you soon. Take care.